If you have a business that's making $100,000, you may have thought you were going to get $100,000 exclusion and you only got 30. So that's $70,000 of taxable income you weren't expecting that now you're going to get hit with tax on. Of course, you're providing services as the business owner too, but at least a piece of that is from the deployment of capital. And that's what the IRS looks at. So they say a capital intensive business is one where a substantial amount of the income comes from the deployment of capital. So that's where it gets a little tricky, and where the gray area can be is what is considered as substantial. So in that case, we're stuck with this capital intensive business rule. And what the IRS says, what's a reasonable salary from that business? So what's a reasonable compensation for the service part of what you're doing for that business? That we can come up with, and obviously is subjective, but the problem is the IRS puts a 30% limit on that reasonableness calculation. So they say what's reasonable can't be more than 30% of the net income of the business. That's a huge limitation.